What is your outlook for Brazil in 2010?
Brazil in 2010 could continue to show good returns. After 2009, what we can expect is for there to be potentially some volatility in emerging markets as investors try to understand whether there will be an exit from fiscal stimulus and loose monetary policy. However, we think that the fundamental drivers of a country like Brazil are very strong, and we think this will translate into economic growth and earnings.
So could you tell us what some of these performance drivers are going to be in 2010?
When you look at an equity market, what you're really looking at is the potential for growth, economic growth, and for that economic growth to translate into earnings. What we see in Brazil in 2010 is a recovery from 2009, where Brazil was actually very resilient to the downturn in the global economy. Brazil was resilient for some reasons, which included the fact that Brazil has a lot of commodities, but also domestic drivers such as domestic demand for infrastructure and for credit growth.
Okay, what are some of the risks that Brazil faces going into 2010?
As I said, we think that investors may start to question whether there will be exit strategies, monetary policy will have to tighten in emerging markets, and we feel that for some investors there may be an increase in risk aversion. However, we think this is only going to be temporary. At the same time, if global growth does not recover as we expect it to in the second half of 2010, then you could see some risk aversion increase. Lastly, the commodity cycle. Parts of the good story in Brazil do depend on commodities, both as an exporter, but also Brazil is a user of commodities itself for the vast infrastructure programs which are taking place and are planned for the years ahead. So we do think that there could be some vulnerability should commodity prices not hold up, but that's not our central scenario.
Okay. So within the Brazilian market, which sectors do you see that will outperform the rest?
Like I said, if we have a question mark over global growth in 2010, we're going to try and look for areas which can be self-sustaining. And domestic demand is one of those areas in Brazil which we think can be self-sustaining. There's a very stable political situation in Brazil, and this is also feeding into economic growth. The central bank has been very credible at targeting inflation in the past. We now have much higher demand for consumer credit. Consumer credit in the past has been lower compared to many other countries, including many emerging countries, and this means that there's a lot of demand for these kind of consumer loans. So we're very much looking at areas like financial companies, but also home builders and consumer related stocks such as airlines, for example.